can I really grow my money in a simple way, or do I have to use a really complex method that only Warren Buffett would understand? Investing can often seem like a really daunting task, and especially for those that aren't of a financial background or not really too sure what's going on. So trying to keep it simple is really important, especially now when you consider that the market is full of so many options to choose from that it can often be overwhelming to actually decide what you want to go for. Obviously, in this video, anything I do say is not financial advice and shouldn't be taken as that. And obviously, when you're investing, capital is at risk, so you want to be really careful with what you're doing with your money and make sure it's right for you. So I'm Ollie, I'm 22 years old, and I've only been investing now for the last 15 months. But along the way, I've been able to learn a lot of those beginner steps, and now finally have set myself on a strategy that I can invest in for the next 30 or 40 years. So the truth is, one of the main issues with investing is actually the sheer amount of information there is out there. So there's so many different types of investing that aren't really investing. So you have day trading or CFD trading or option betting, and these are more risk and require a lot more research than standard long-term investing. And especially now, recently, where these have become more course-run things, especially day trading and CFD and things like that, as get-rich-quick schemes that I've personally tried myself and failed miserably at. And these few things alone is simply enough to put anyone off. So people then look away from investing and don't feel comfortable with taking those first steps. So the first step before starting at all is actually understanding the account type you want to go for. Now, in the UK, we have a stocks and shares ISA, and this is really one of the most powerful tools and is really fortunate that we're able to use it. So what actually is it and what does it do? So a stocks and shares ISA works in the exact same way as a generic investing account. However, it has a massive bonus. Each year, each tax year, we're able to invest up to £20,000 as a deposit, and any money that we receive in dividends or growth in the stock is completely exempt from any taxes. So you now know the right account type that you want to be going for, but the next thing is to actually choose the correct brokerage. Me personally, I use Trading 212, but there's also so many others out there like eToro, Free Trade, Invest Engine, depending on what you want to do, also offering really low fees and a much better brokerage platform than what we potentially could have got 10, 15 years ago. So what is step 3 then? Well, step 3 is actually about the strategy. Now, this requires a lot of research, but here is what I've personally decided on now after 15 months of investing. This is the strategy that I've finally decided that I'm going to take forward for the next 30 or 40 years. So the simplest investment strategy you've often heard many other people talk about is simply to invest straight into a global ETF like the Vanguard FTSE All World or Invesco FTSE All World, and there's so many out there that you can choose from, but ensuring you pick one that has really low fees is really key. So what are the benefits of doing this over trying to pick your individual stocks? Well, it's been proven now that it's really difficult to actually try and pick stocks and beat the return of the market overall. Because what a global ETF does is allow you to diversify across a lot of markets, meaning you have reducing your risk as you're not putting all your eggs in one basket. By investing into something like the FTSE All World, you're actually investing a small amount of your £100, let's say, straight into 3,000 companies or just over 3,000 companies. Whereas if you would just pick 2 or 3 stocks, obviously there's far more risk associated with that. But this is where my strategy differs slightly and goes that little bit further. So for me personally, I move 90% of my money straight across into my main pie, which I invest into. And then that last 10% that I invest each week into my portfolio, I keep aside and I look for opportunities where I could potentially get some good growth and invest into some single stock. This brings us on to the 4th and final step. And realistically, it's the most important and the one I've struggled with the most, but it's definitely where the real growth is. And that is more than simply to stay consistent and invest the same amounts that you can afford by a good budgeting every week or every month and stay consistent over a long-term period. So me personally, I suffered with this when returning to uni. I had to reduce my investments. I actually withdrew money from my portfolio, which you can see, and that has been one of my biggest downfalls. I've lost almost 8 months of growth potential. Therefore, in summary of this video, basically, I personally invest in long-term, low-cost ETFs with the majority of my money and then allow myself a little bit of money on the side to go and pick stocks to keep it interesting for myself, but the majority of my money and my long-term growth is heavily weighted purely into simple, low-cost ETFs. I'd love to hear about your journey to understand exactly where you are along your journey, and maybe I could learn something from that. Whether you're just starting as an 18-year-old or you've been investing now for 20 or 30 years. It's always nice to see what it can do for people. So let me know in the comments below, and if you've enjoyed this video and like to see a bit more content like this, remember to like and subscribe. I would really appreciate it. Thanks for watching.